Good morning, everybody. It's Monday, February 10th, 5:25 a.m. Central Time. Grain markets are lower this morning. March corn futures down 1 3/4 at 485 3/4. March soybeans down 1 3/4 at 1047 3/4. March Chicago wheat down 4.5 at 578 1/4. March Kansas City wheat down 3.5 at $6 3/4. March spring wheat down 1.5 at 626 1/4. We had some news regarding farm income out from the government last week. Let's start there.
So, U.S. farmer income is expected to surge this year due to a spike in government aid. According to the USDA, net farm income is projected to rise to $180.1 billion this year, marking a 30% increase from last year and the first rise in 3 years. The increase in disaster payments and other government aid will make up more than 80% of farmers' income growth this year. Total crop receipts, however, are expected to decline by 2.3% compared to 2024. Corn receipts are estimated to fall by 4.3%, and soybean receipts are forecast to decline by almost 7%. This year's expected income after inflation adjustments is 45% higher than the 20-year average, but 8.9% less than the record earnings of 2022.
USDA had some pretty good graphics out along with this little piece that I will run through here. So farm income, of course, expected to be up, and this is on the heels of a whole bunch of direct payments and economic assistance and disaster aid payments. It's not because crop prices are higher. When you look at cash receipts, they broke it down. They had corn, soybeans, fruits and nuts, vegetables and melons, wheat, cotton. Everything's down. Like corn's going to be down for a third consecutive year. Soybeans expected to be down. Cash receipts for a third consecutive year. Same thing for wheat. The direct payments, and this is only like 10 billion worth of the 40 or 50 billion that they're doing. This is the stuff that you guys are going to see in the mailbox sometime next month, I believe. About $44 per acre for corn growers, about $31 per acre for soybean growers, $32 for wheat, 85 for cotton, 71 for rice. Those are ballpark numbers. That's from our friend Paul Neefer, and this was a Farm Journal graphic. But there's some limitations and stipulations on those payments. The larger portion is actually disaster relief and all sorts of other stuff. Now, money being sent to farmers is nothing new. We're not going to be quite back to 2020 levels. In 2020, farmers had pandemic assistance. They had still MFP that year and some other things. So we're not going to be quite as high as the 55 billion I think that we had in 2020. 2021 was also pretty high, but this is going to be, north of $40 billion. It's a lot of money. There are differing opinions in farm country about these payments. We did a survey of our premium crowd regarding the direct payments, and it was split down the middle. A very slim majority said we don't want the money. And a lot of people said we do want the money. I'll tell you who's on board with the money 100% are ag lenders, input dealers, people like that, because a lot of this cash is going to flow through to them. It's going to be used to pay back the bank. It's going to be used to buy seed. It's going to be used to buy fertilizer. It's going to be used to make equipment payments, that sort of thing. So if you're somebody who sells things to farmers or lends money to farmers, a lot of this money is going to flow right back to you. And those were the people that really pushed this. One of the more outspoken advocates of these direct payments in particular was Farm Credit. And of course, Farm Credit wants their money back, right? And that makes a lot of sense. So I don't have an opinion about it one way or the other. I think it could have an impact perhaps on the acreage rotation. Corn acreage is going to rise this spring and was going to rise in any case. But now that farmers have a few extra bucks, it may make even more sense to plant the more expensive crop. So we'll see what happens. Great stuff from USDA, I guess. I mean, interesting. I don't know if it's great. You guys can tell me if it's great.
It's definitely interesting. President Trump plans to impose 25% tariffs on all imports of steel and aluminum. Trump made the proclamation on Air Force One near the Super Bowl on Sunday. Trump also said that reciprocal tariffs will take effect sometime this week. And very simply, it's if they charge us, we charge them, Trump said of the reciprocal tariff plan. Canada, Mexico, and Brazil are the largest sources of U.S. steel imports. Canada, China, and Mexico account for the majority of U.S. aluminum imports. The news comes just days after Trump, Canada, and Mexico announced a 30-day pause on universal tariffs.
Canada is probably the biggest one here. Canada is 39% of U.S. aluminum imports and 24% of U.S. steel imports. Mexico is substantial, 15% of steel imports and also about 7% of aluminum imports. China is almost 10% of aluminum imports. I have yet to hear anything about retaliation. I don't know if they're going to retaliate, but it could matter because, of course, Brazil's been our largest corn buyer. China's almost always our largest soybean buyer. This was kind of the headline yesterday. I guess maybe some of the markets reacted to it. Maybe row crops were down overnight on this, but they bounced back just a little bit. So, the tariff story, you get good news one day and then you get this news the next day. What's the next headline going to be? I don't know.
The USDA has halted funding for some agricultural conservation programs. The move is part of the Trump administration's comprehensive review of federal financial assistance to ensure it aligns with its priorities. Trump had previously promised that farmer aid would not be impacted by the review. The freeze is affecting conservation programs funded by the Inflation Reduction Act, which set aside $19.5 billion for farm programs over a decade. Two federal judges ruled that Trump lacks the authority to block funding allocated by Congress. However, the administration continues to review federal spending.
So we are unclear on exactly what's being cut here. It sounded like a lot of it was livestock related. Some of it was conservation acreage related. DTN had a nice write-up. DTN repeatedly saw comment from USDA over which programs are frozen and questioned why payments to individual farmers were frozen. USDA's press office did not respond. So I guess when Trump and his crew go in and they decide they're going to cut spending in a million different places, there's going to be some casualties here in ag, and they could be permanent. They could just be temporary while they get the paperwork sorted out. So I don't know. I think that there are some questions that remain unanswered here.
Last week's rainfall in Argentina brought much needed relief to the soybean crop. According to the Rosario Grains Exchange, more than 60% of the nation's crop received precipitation. The rainfall caused the exchange to reduce its estimate of early planted soybeans in fair or poor condition from 50% to 30%. Northeastern areas of Argentina's main farmland have yet to receive precipitation. However, widespread rainfall is forecast for the area this week. Last week, Patria Agronegocios reported that Brazilian farmers had harvested 16.8% of this season's soybean crop compared to 23.8% last year.
Anecdotally, the early yield reports out of Brazil are pretty good. It's a big crop. It's just a question of how big at this point. So rains in Argentina last week, as you mentioned, favored kind of the southern soybean areas, but the rains coming this week or over the next 10 days favor the central and northern areas. I think this is a big deal for Argentina, and I think this is going to be very helpful. It's going to help to offset some of that early season dryness. The markets have been a little bit softer, perhaps, on this. The soybean market is flirting with some trend support here early this morning. If you're a bull and you want to see soybeans go higher, you'd probably like to see a close above 1046 or so in this March contract this morning. The corn market is still holding trend support, but has backed off a little bit. I think that these rains in Argentina maybe resulted in some of the pressure that we saw here the last, call it, day and a half.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
Should I incorporate my farm? Paul Neiffer, the farm CPA, who's been doing this for decades, answered this question in a video that was about half an hour long. There's a lot of things to consider here. There's a lot of things as it relates to things like crop insurance, some of these direct payments where maybe incorporating or separating entities. There's a lot that can go into this, and Paul answered a lot of questions. Jim was on Friday. Jim is a professional interest rate trader, also a big-time media personality, and we talked about everything. We do Macro Friday every 2 weeks. We talk about interest rates. We talk about the stock market. We talk about tariffs. We talk about policy. Excellent stuff from Jim every other Friday. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. Our daily video blast is at 10 a.m. Central Time. All of my cash grain marketing recommendations are included. Check that deal out this morning, guys.
The funds increased their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, February 4th, large money managers were net buyers of 18,000 corn contracts. The net long of 362,000 contracts is the largest since April 2022. The funds were net sellers of 279 contracts of soybeans and net buyers of 24,000 contracts of SRW wheat on the week.
Large money managers or large speculators still love the corn market in net. They're net long 361,000 contracts of corn. That's a substantial net long position. Historically, you're a week or two away from some heavy buying resulting in a record net long. The previous record, I think, is 409,000 contracts. It's really been a phenomenal shift here since July. The producer, merchant, processor, user category, they're heavily net short, and this is indicative, I believe, of farmer selling. There's been a lot of farmer selling into this corn rally, and that's why the end user or the commercial is heavily short, because when you as a farmer go and sell to the elevator or to the ethanol plant, they sell the board, and that's what you're seeing in this graphic here. It's still kind of surprising to me that large money managers prefer to be long the soybean market, given what would appear to be a hugely burdensome global supply and demand situation, but they're still long. The wheat one kind of puzzles me. We talked about this with Matt on Friday. World wheat fundamentals are not bearish from wheat in the upper fives, low sixes, but I guess the wheat short is kind of the short leg of a spread here, the way it looks.
USDA will release its monthly crop production and WASDE report on Tuesday morning. Traders expect a slight reduction in the old crop ending stocks projections for U.S. corn and soybeans. The same can be said for the global corn and soybean estimates. Small revisions are expected with regard to Brazil and Argentina crop estimates.
To be very clear, this is an old crop report, so there's not going to be any new crop acreage or yield or anything like that. This is, if they make adjustments, it's going to be on the demand side of the balance sheet. Some people think that the corn demand numbers may come up, and I could argue that the export number is too low given the pace of sales and shipments and all of that. So we're looking for some slightly lighter U.S. carryout numbers for corn and soybeans. World numbers similar. South American production, I don't know if you'll see some tweaks perhaps. Brazil soybeans supposed to come up a little bit. That's what the trade believes. Argentina may come down a little bit for both crops. Brazil corn maybe come down a little bit. I don't know. They could wait too. It's early, but I think that Brazilian soybean number probably comes up. That would be my guess. This is not the biggest report in the world. It could be a market mover, but not the biggest report in the world. At the end of the month, I believe it's the 27th, 28th, we've got USDA's Ag Outlook Forum. We'll see an initial kind of projection of the new crop balance sheets. And then, March, we've got prospective plantings. May is when we see our first official look at the 25-26 balance sheets.
President Donald Trump and Vladimir Putin have discussed ending the war between Russia and Ukraine. The New York Post reported that Trump spoke with Putin on the phone about ending the conflict. Trump claimed last week during an interview that Putin wants to stop the bloodshed and bring an end to the war. The Kremlin neither denied nor confirmed the communications between the two leaders. In November, Putin said he was willing to talk about a peace deal with Trump, but refused to give up any land and demanded that Kiev drop its plans to join NATO. Trump will likely meet with Ukrainian President Vladimir Zelensky this week to discuss efforts to end the war.
So Putin sounds like he doesn't want to do this anymore, and Ukraine's going to run out of money because one of Trump's campaign promises was he's going to end this war, right? So I think the war is going to come to an end. I don't know when. I don't know what the timeline is going to be. The impact for us would be on the wheat market because Russia and Ukraine combined are a huge percentage of global wheat exports. And for, like we talked about, I think on Friday, for 2 years, the last 2 years, the wheat market's trended lower while this war was ongoing. So my thought was that maybe if it ends, maybe wheat actually reverses and the wheat market can actually rally because Russia will perhaps maybe stop flooding the world with cheap wheat to fund its war machine. That's one way to think about it. What did cattle do last week?
Cattle futures were mostly unchanged on Friday. Live cattle were 15 cents to 57 cents higher. Feeders were 40 cents lower to 65 cents higher. Cash cattle trade was light last week. Down in the Southern Plains, cattle were $2 lower compared to the previous week at 206. Up here in Nebraska, cattle were also $2 lower at 208. And then over in the Western Corn Belt, cattle were $2 to $5 lower at 205 to 208. Box beef was lower on Friday. Choice was down $2.11 at 321.87, and select was $1.87 lower at 312.90.
U.S. dollar's about flat this morning. Stocks are higher. The S&P's up 28. Dow Jones up 160. Bonds off just a little bit. Gold is on fire, up $43 in the April COMEX contract. Crude oil is up 89 cents, and the March WTI at 71.90. Have a great week, guys. We'll be back on Tuesday.